Thank you, Carl and Sarah. Welcome to the Halftime Report. I'm Frank Collin in for Scott Wapner. Front and center this hour, brushing off a new round of tariff threats as investors gear up for a critical week of earnings. The investment committee standing by right here to help you navigate it all. Joining me for the hour, Joe Terranova, Shannon Sakosha, Steve Weiss, and Jim Lebenthal. Quick check of the markets. As Sarah and Carl just mentioned, the markets just turned very fractionally higher in positive territory right now. You're looking at the Dow essentially flat, just up a few basis points. Similar story for the S&P. The Nasdaq, the best performer on a relative basis, up just under 0.25%. And all of this as investors digest the latest tariff threats out of the White House. And with that, we're going to go right to Megan Casella with much more. Megan.
Hey, Frank, we just heard a little bit more from the president on this. He was asked essentially how firm his threats are. All of these latest threats now set to take effect on August 1st. He was speaking about this in the Oval Office. Take a listen, and we'll pick it up on the other side.
The deals are already made. The letters are the deals. The deals are made. There are no deals to make. They would like to do a different kind of a deal, and we're always open to talk. We are open to talk, including to Europe.
So the deals are made in the president's mind, but if he gets to hear something that he likes better between now and August 1st, he is open to changing his mind. It might sound contradictory, but he's just looking for the best deal he can make. He went on to say that the Europeans are coming over to Washington. We have no further details on that, but it does suggest negotiations are ongoing, and we'll see if they can strike some sort of an agreement, Frank, between now and August 1st.
All right, I'm Megan Casella, live at the White House. Megan, thank you very much for the very latest. I want to come over to you. We're talking about earnings season. We're kind of really shifting the conversation from tariffs. The markets don't seem to be reacting that much to the tariffs. Evercore ISI out with a note saying that tariff developments increase odds of a sell-off. Obviously, we're not seeing that right now. Markets turn positive. But they go on to say likely result in further EPS estimate reductions, even as investors are sanguine about the potential EPS estimate cuts. The inverse correlation of the trade uncertain and the S&P 500 increases the odds of a near-term pause in the stock's rally. Do you see a setup like this one, or do you think the tariff threat and fear may be overblown and people are really looking ahead? They're looking ahead to earnings.
I think, with the exception of the first announcement of tariffs on Liberation or Independence Day, whatever it was, Liberation Day, the markets ignored it. The markets ignoring every risk. They're ignoring the risk with the Fed. I mean, you've got somebody in the White House who's a real estate investor. They live on debt. So you've got that. You've got, normally, you'd see a major upheaval in the bond market because rates would just go through the roof with instability there. If you listen to Kevin Haslett today, and I think he's a smart guy, he's got zero credibility with what he says, that tariffs aren't going to impact the buyer, meaning the consumer, or companies. I can tell you in the supply chain, as we look at it in some of our companies, aluminum's up 50%. So sourced from the U.S. The U.S., the companies here are not fools. They now see a pricing umbrella 50% above where they were. So where are they? They raised their prices 35%. So even if you don't pay the tariffs, you're going to pay it here. And look, companies that have EBITDA margins, like grocery stores, like many others, the auto companies, they're mid-single digits at best. They can't absorb the tariffs to operate a loss. So we'll come through. So the question is, back to Trump, he said there are deals. There are no deals. There are letters that he's saying this will be our deal. But deal takes two parties. So he's going to have to renegotiate. The question that you bring up, at some point, he's not going to tackle it. At some point, he's got to say, we're doing this, not just with steel and aluminum, but more broadly, so every other country feels it. The critical countries are, of course, India and the EU and Japan. Once you get through those, then the others really don't matter. So I think you've got to see some deals or some maybe fake deals like we did with the UK, where it really doesn't matter. In terms of the market, overall risk in the market, it's definitely the Fed, right? You can't put a complete dove in there. It's definitely tariffs. It's also inflation that could come from the spending bill that was just passed. And then it's more cuts what they're talking about. So I think that the market's going to continue to ignore these risks as they have for the last year. And the market accepts, okay, and just the final word in earnings, it would be an extremely disappointing earnings season, if more than 75% of the companies don't exceed expectations, because that's what they always do broadly, both on the revenue line and on the earnings line.
But is that what you think is going to happen? You're saying you expect that to happen?
Yeah, I do.
Okay.
I do.
So I feel like the three of you are pretty optimistic about this earnings season.
I didn't say that. I didn't say that.
Well, I mean,
I don't think that
which have been lowered in all fairness.
I think you have to have a
CNBC.
strong awareness
growth
of what's going to happen this earnings season. The potential for margin compression to occur is real. And I think if you're looking for some form of a near-term catalyst that's going to shake the bullish momentum, I think it's coming from earnings. It's not coming from the announcement of these particular tariff rates.
It will come to tariffs do stick if he doesn't back off. So if August 1 comes, and all those tariffs get implemented.
But you mentioned that the EU and, in your mind, India are the two important ones. Well, the EU one's hanging in the balance right now. The EU said they want to work with the president, but they've also said previously that some of the terms seemed a bit unreasonable, and that's why this has been extended.
Right. So my point is that everybody said we want to work with the president. India said it. Japan said it. Japan said we'll have a deal by June, July. Where are we?
Well, in all fairness, some people say they want to work with the president, but have also spoken out saying it's unfair. China is a great example, and obviously
China's
a huge situation there when it comes to trade. I don't want to leave Jim out. Jim, I want to come over to you.
Never leave Jimmy out.
Yeah, we were talking before the show, so please let me know if I'm mischaracterizing, but you're not quite optimistic about earnings season. You're actually taking a little bit of money off the table, Oracle in particular. Oracle up over 30% year to date. What's the rationale going into earnings season, and also the idea that we have July seasonality, where July is one of the best months of the year?
Yeah, so let me just simplify my message. I'm picking stocks, okay? I see, this was a great discussion. Risks, opportunity, I see them fairly balanced. I look at a market overall, the S&P 500, that trades at 21 times next year's estimates. Maybe those estimates will be hit, maybe they won't. But I don't mind in that environment taking just a little bit of money off the table. And for everybody watching, I want to make this clear. I'm not negative, okay? Don't look at it that way. What I'm trying to do is I'm saying some of these stocks, first off, remember, I've been fully invested since the beginning of the year. So this is a gangbusters year for me so far. I'm taking some money off of the table in my winners. Oracle was last week. Frank, you'll be on tomorrow. I'm most likely to have another one tomorrow. Just raising a little bit of a war chest, because what I think will happen this earnings season, I do think overall we're likely to exceed a very lowered bar. But what I'm really looking for is what always happens in earnings season. One or two stocks actually have good reports, and the markets, for whatever capricious reason, just decide to sell the heck out of them. And I want to have some dry powder available for when that happens. If it turns out that I'm wrong on that and the market keeps going higher, I'm not going to build so big of a war chest that it's going to hurt me as the market goes higher. But I do want to point out, seasonality usually does occur August, September. And it's frankly because of people doing exactly what I'm doing, saying, listen, we've come a long way in a short period of time. It's August. I want to put my feet up. I'm actually going to take a little time off later this week. I want to put my feet up and not worry about things so much. I'm still going to be plenty invested, okay? The market goes down, I'm going to feel it, but I'm going to have the dry powder with which to pounce.
All right, so with all that said, if you guys don't mind, Lisa Shallot from Morgan Stanley Wealth out with a new note. I just want to, it's a little bit long. I want to run it by you guys and see if you agree, disagree with this thesis. She says in part, her and her team, we see the S&P 500 gains beyond the 6,500 to 6,600 range as difficult to achieve. Some investors still envision risk around inflation and policy restraint. We're also unconvinced the dollar weakness is purely benign given the amplification of tariff impacts. Furthermore, we're skeptical that tax code changes, net of some pay-fors, are stimulative enough to prompt a new investment boom. And then they go on to say something you guys were talking about. Operating margin gains may also be elusive as accounting mechanics, demand destruction, tariff absorption, and commodity gains through upside earnings surprises. So quite a bit to digest there, Shannon. I just saw you kind of raise your hand there.
Yeah.
A lot in there. I'm going to be in all fairness a lot in there.
I want to focus on the very last part, that the tax opportunity is not enough to stimulate a boom. What I would counter, and I have a lot of respect for Lisa, what I would counter is that it would not be if we were in a situation over the last number of years where there had been significant investment, capital expenditure, and we had not been in a very difficult regulatory environment. So I think that there are multiple tailwinds that, while the tax changes alone are perhaps not enough to catalyze this investment boom, I think coupled with deregulation, lower interest rates, which are coming. I'm not going to, we don't spend a lot of time on that. And also the likelihood that companies have been waiting. Investors have not been asking companies to grow in this past period. They've been allowing them to hunker down and protect, to Joe's point, their margin. That is going to shift. And so if that, to me, is one of several forces that are likely to drive this boom, which is why we think that there will be an acceleration of growth into 2026.
In all fairness, I was just talking to a pretty big transport CEO, exposure to a lot of different industries. They said the one big beautiful bill passing, yes, that's a tailwind, and companies want to invest. But at the same time, if there's any more tariff disruptions, they may start to pause again. So concerned that while a lot of people think that this tariff won't happen on August 1st.
They are paused. They are paused. They're not going to pause again. They're all paused. Like, there isn't this massive M&A activity.
Does the One Big Beautiful Bill start it, or is it still paused until more clarity?
No, I think you need to have more clarity, but I think it's one of several catalysts. I mean, tariffs are going to be with us through the end of the year, the bottom line. And so at some point, though, investors are going to catalyze investment to these companies because they're going to be looking for you not to sit on your hands anymore.
And what was in there to drive CapEx, there's small levels of CapEx. It's not like you're building a new plant. They're basically for
isn't that
equipment.
the point of the tariffs, to build new plants?
No, you can do it's
How long do you think it takes to put up a
3 to 5 years to build a new plant?
Software.
But isn't that what this bill's supposed to
10
do?
years or
to
so.
start the process?
Well, for building plants, yes, and they're expanding it. But the point is to drive additional growth. You're not going to see that. The major CapEx spending is still on pause. We've yet to speak to a CEO where there's clarity. And that even includes where it's not, major CapEx spending, like a healthcare insurance company. They don't know where the FDA is. So everything's difficult. They don't know where Medicaid cuts are going to wind up.
Then the other side of the coin, we got S&P price targets. RBC, we're actually raising their price target. 62.50 now. It was 57.30, but they say they're a bit worried about the momentum trade, Joe. This is something you've highlighted. There's no change to their 2025 EPS forecast of 258, and that's slightly below consensus. But what they've learned from early reporters, which makes them think it's too early to stop worrying about the tariff impacts, that they're adding the momentum trade and earnings sentiment for mega cap growth to the list of things that are worrying analysts about the stock market near term. Are you worried about the momentum trade?
Well, the momentum trade is a reflection of positioning, and I'm always concerned with where's positioning, where's sentiment. Look, I think a lot of these notes are paying too much credit between the correlation of the macro environment and where stocks go. I think it's more about positioning. I think it's more about earnings. And I think when you're talking specifically about the momentum factor in early July, you have seen days in which it looks like the momentum factor is rotating to other areas of the market. As I'm speaking, the momentum factor today is strong once again. In fact, it is the strongest factor to date. So it is not proving to have this sustainability into terms of deteriorating into a deeper correction. We're not witnessing that so far. And what that means is that positioning is going to remain anchored where it is. And if positioning is going to be comfortable and anchored where it is, you're not going to get that rotation that's going to force the correction in the market. You ultimately will get that rotation at some point if we fall down on earnings. You mentioned technology, communication services, and the expectation there for earnings. There is a lot of pressure on those two sectors to perform accordingly because that's where the strength of the earnings season is expected to be, and that's where the recent positioning has started to build once again. So you kind of look at those sectors and you're very aware of what that performance is going to be, and most importantly, what's the earnings reaction. I'll tell you this, if you have a good earnings season and the market does not respond with further appreciation, that's a signal. The market's exhausted, and you probably will expect the remainder of the quarter it'll be difficult to achieve further gains.
All right, let's look ahead a bit. Deutsche Bank out with a note, kind of talking about what you're talking about. It's a quiet market right now, but the title of this note is actually Beware at the End of the Month. They say in part markets are heavily discounting the new August 1st tariff rates, and given how we might not know the outcome until the final hours, there's the potential for a very sharp market reaction. If the tariffs snap back higher on August 1st and we get an underwhelming jobs report, that would easily resurrect fears around a U.S. recession. Do you agree with that thesis that there's two big risk factors coming up at the end of the month?
So is the Fed cutting then?
I mean, I don't think the note gets that far into
it. But the point is there's something on the other side of it. And that's
the two cuts you're talking about.
Well, let's just get to the beginning to cut once again from what was done in the fall, right? In September, to me, I've identified, I think that's the moment that the Fed will actually start to cut once again. And I think the reason for that is I don't think you're going to see the inflation show up in the June readings, which will be reported tomorrow, and then in the July readings, which will be reported in August. If you don't see that inflation begin to show itself, the chairman has already said under testimony in front of Congress and the Senate, those are the 2 months he's looking at. So I think in September, ultimately, you get that rate cut once again. probably another catalyst for the market, in particular as you move into the fourth quarter.
Just one quick note. We're going to find out with PPI this week about inflation if producers are raising their prices. But Jim, I want to come over to you. Are you also, is that why you're starting to trim a bit? You're seeing that potential storm at the end of the month?
Well, let's just be clear. My trim is tactical, all right? I think by the end of this year, just to go back to where we started, I think the bill, the one big beautiful bill, is stimulative in a nice way. I think the Fed will cut because of what you're saying, Joe. I think the inflation readings are likely to come in lower. And by the way, for tomorrow's CPI, the headline figure expected is 2.6%. And Chairman Powell has said, if not for tariffs, he'd be cutting already. So if you don't see real tariff impact, those cuts are coming. But I do want to talk about one risk that also is coming in. We've got to be clear about this. August 1st, all right, that's the new line in the sand. If we kick that can further down the road, if negotiations aren't done, if trade deals, letters, whatever it is, aren't done, and we kick that can further down the road, I don't think the markets are going to like that at all. Everything that's been talked about already with uncertainty, and you see it, by the way, in continuing jobless claims, clearly there is no hiring going on. There's no firing either. But if you continue to kick that can down the road, I'm worried that firing will pick up.
Jimmy, don't you expect this is going to be ongoing for the 4 years of President Trump's term? I mean,
unfortunately, Joe, you're probably right. Okay, so I'm sort of saying what the most benign outcome is you get a lot of clarity on August 1st. I would settle for some clarity, but what I don't want is what we had happen last week, which is basically you've had no progress, right? So kick the whole can down the road another 3 weeks. Don't do that. I mean, we can't do that.
I don't know if the camera can get this, but I was just sent to this by a friend of mine who's one of the top bond brokers for duties. When you import into the U.S., you've got to pay a duty. Last year, on $1.2 million of goods, the duty was $35,000. What it says here, if it can be close, it says no prediction possible on what you have to pay for the duties. So you don't know what's going to cost you to bring things in to the country. If you don't think that has a chilling impact on it, then you're mistaken, number one. Number two, let's not forget in terms of inflation, which still is a risk, that there was so much buying forward, right, to beat. You go look for a car, they say, still you can buy them, even a week ago, on pre-tariff costs. So once you see that inventory subside, you'll see inflation move up. And that will also be chilling towards demand. So the question for the earnings is, if the companies are honest, how much pull forward is in buying that's juiced their earnings and their revenues now? I don't know if we'll be able to determine that, but I'm optimistic on the markets, on the way the market's going to approach the earnings period. I'm not optimistic on earnings supporting the valuation.
The market seems comfortable with an average weighted tariff of 15%. I think everyone would agree. That's basically what the market is pricing in.
I think it's 10%. I don't think it's 15%. The market's comfortable with.
Okay, 10%. I think it's 15. We agree.
Whatever.
We agree to disagree.
I think the certainty.
If you go to 12 and a half,
it doesn't matter. It doesn't matter. The certainty of the
JP Morgan on my show, Worldwide Exchange.
What it was.
They say the aggregate now is about 18%, right
18.
around there. Yeah, that's what they say. That's
10,
what they say.
12, 15, 18.
Yeah.
If you begin to go 20, 25%, I think the market has to recalibrate on that.
So
I don't think that's going to happen.
Percentage points rattles everybody. I mean, 18 to 20. What's the big difference?
We started the year at 2 to 3%. That's
look at the size
I
of
think
the
last year we were like
economy.
4 aggregate, something like that. So it was definitely low single digits, but you're saying just a few percentage points?
The market is comfortable with, let's call it that teens range. Okay. If we believe that as this progresses, and I disagree that August 1st is the end date, this is going to go on until the entirety of President Trump's administration. This is going on. There's going to be a continued
17 more days to
negotiation.
talk about tariffs, at least on paper on the calendar right now. Why don't we switch gears a bit? Looking at the banks, the big banks start reporting just as soon as tomorrow, actually. Looking at Wells Fargo, Citi, also JP Morgan, all of them are higher right now. Shannon, I want to come over to you. What are your expectations for big bank earnings? A quarter ago, we saw them benefit from some of the volatility. At the start of this quarter, the VIX was above 50. Now it's certainly settled back down. Do you see that same tailwind for the banks?
Well, I think investors have been cheering the results of the bank stress tests, and so therefore you've seen some nice appreciation in financials. And so the other thing to think about is like what we don't talk about nearly as much as we did, I think, 7 or 8 years ago, is buybacks. And what are these companies, what are these banks buying their stock back at, and is that attractive in this environment? I think the other challenge is that what is going to be enough to catalyze this significant shift higher in M&A? What is going to be kind of driving, whether it's going to be trading volume or where's going to be where are the earnings going to be driven by. And so I think for us, when we look at just this rotation to, sectors outside of technology and communication services, financials is a good home for that. One of the things I would say, though, Frank, is that outside of the big banks and the brokers, you haven't seen as much participation with the regionals. And so that divergence between the big banks and the regional banks, that's pretty wide right now. And so you're seeing this pick up in this deregulatory environment we talked about earlier, starting to see that in some of the deals that are being announced.
Well, we just saw a deal today, Huntington buying a Texas bank. I think it was a $2 billion deal. Your view on this, one of the big tailwinds for financials this year was supposed to be deregulation.
Yes.
Is this the first sign? Is this the spark in your mind that deregulation is going to lead to consolidation, M&A, et cetera?
There was a little bit of an uptick in M&A in the month of May, a mild uptick. We're beginning to see the expectation that you could see further M&A as we move through the end of the year. As it relates to regional banks, there's been a clear divergence in performance. We have significant ownership there. So there's a lot of disappointment in some of the names that have underperformed. In the case of Huntington Bank, that is a regional bank that's working really well. Ohio-based regional bank looking to expand, clearly growing, intentions to go to the Carolinas. This deal today, that gets them deeper into Texas, Dallas, Houston, expanding, growing. That is what you want to see from these regional banks. However, it is not a universal thesis. It's very idiosyncratic, and that's why when you look at these regional banks, our ownership having significant amount of it, it's really been somewhat frustrating because they have not overall performed.
Just to cap it off, I want to go back to the big banks. Weiss, you own Goldman. Goldman getting a downgrade today from Citizens, actually pulling the price target. Analysts basically saying, this stock's run up. I don't see any more upside.
Who cares? I mean, it's just one person's opinion, right? It's one person's opinion, and I'm just in it for the long haul. So, look, I think most of my portfolio is overvalued, but what am I going to do? Sell it?
No.
Buy it back lower?
You're not going to
pay taxes on it? I'm going to stick with it.
All right.
You're not going to sell it. Goldman Sachs is in the sweet spot. The stress test just finished. Capital allocation strategy benefits significantly from that. Investment banking's been strong. There's strong engagement on trading. Goldman literally is back in the sweet spot that we remember from 20 years ago.
Jim, before we go, I want to get your take on Citi. Obviously, Citi coming up as well. Last quarter was fixed income trading. It was equity trading. That rose by 23%. Do you see a similar setup this time around?
Yeah, I see a similar setup. I see a lot of other positive things that can go right. I mean, some things can always go wrong, but there's a large capital return to shareholders going on. They're in the middle of a $20 billion buyback. The market cap's around $120 billion. That's meaningful. You can see upticks in investment banking and wealth management. And not that I'm saying this will happen tomorrow, but something to be on the lookout for is improvements with regulators. They are working under some consent orders, and maybe there's some light at the end of the tunnel that they'll talk about.
I got to give you one more. In the financial sector, watch the insurance companies. They had pricing power. They were performing well 6 to 12 months ago. Now they are all rolling over. They've lost their momentum, and the struggles are beginning. You're even beginning to see the revenue growth deteriorate.
All right, moving on. And welcome back to the Halftime Report. Let's get to some of the big calls of the day. KKR downgraded to market performance. Citizens, even though Weiss said who cares, Joe, I'm going to toss this one over to you.
I'm not sure why. Look, I think private equity.
Do you care, Joe, they downgraded it?
Oh, I always care. I pay attention to analyst
you're so much
notes.
nicer than me.
Come on, you have to respect the analyst notes. You have to read them. Some you agree with, some you disagree with. We're actually going to talk about one in a little bit. I'll just do it right now. Church and Dwight got downgraded to sell. I totally agree with that. I think Church and Dwight, momentum's rolled over. Staples running at valuations that are high. But as it relates to private equity, KKR has had a little bit of a bounce back. We took ownership of it during that bounce back. We will see what happens here on this earnings report. I think this is going to be a very strong earnings report for a lot of the private equity names. So I somewhat disagree with the call. I think you stay with them.
But they're all still down year to date, too, right? Like just a little bit, a touch?
Marginally down year to date,
I mean,
about 5%.
They haven't participated the way other things that fully participate in the rally.
It's a defensive
They're
trade.
down 5% year to date. They're up 20+% over the last 52 weeks. So when we are looking at momentum, we're not just looking at a shorter body of a period of time. Rather, we are pulling back the lens. We're looking at 12-month periods as well.
All right, moving on. We're going to go to one of your holdings, Weiss, so we're going to see if you care this time around. Taiwan Semi added it as a catalyst-driven idea over at Morgan Stanley. Taking a look at the chart right now, pulling back about 0.75%.
That's a great call. And I care a lot because on my side. No, look, here's my point. I don't care because I don't know the analysts. So how can I care what they're saying if I don't know them? Let's move on to this. Look, Taiwan Semi, I keep saying it is the best positioned. Very well positioned. NVIDIA, if you like NVIDIA, this is a cheaper way to play it. It's still got great growth. It'll keep going. It's dominant. They are onshoring. It's going to take 10 years or so to build the plants here. They told, they pulled out of, I think it was Japan, money they can put a plant there, and now also adding that to here. The big concern for me, though, is, of course, what's happening with China. And I worry about that, and I worry about it quite a bit, actually. It's, intelligence services that are getting reported, say, Invasion 27.
Okay.
I think they preserve this, but it'd be under communist rule, so then you don't want to be there.
We're going to button it up really quick on Taiwan Semi, but part of the analyst thesis there is if they raise full year guidance, the stock moves higher. Pretty normal setup there. All right, I want to move on to Win. Target raised to 128 over by Deutsche. Jim, you own this one. Your take on this call?
Jimmy, you work at Deutsche also?
No, I said call by Deutsche.
No,
Jimmy
but
owns
I thought
this.
Jimmy probably wrote this. The upgrade.
Joe, I need you to get in this at the end of the month. All right, but we'll talk about that at the end of the month. Look, Win is enjoying a lot of positive analyst sentiment right now. It has gone from $70 a share in the dark days of just 3 months ago to now over 110. I do think that the stock is now starting to price in 2 years from now some actual earnings power from the Dubai resort. I think it's getting respect for the capital allocation that it's done. It's a very well-run company. At this point in time, I would expect the stock to consolidate a little bit for the next month. Earnings August 12th. I'm not getting bigger in it right now. This is a time to just wait and let it consolidate.
Re-rated outperform over Evercore. Your take on that one, Jim?
Exxon. Love Exxon. All right, look, we're going to have the discussion. I guess we're going to have the discussion about which way crude oil prices are going to go. And the answer is I don't know, and nobody knows, and I don't care. Steve, do you care about which way prices of oil are going to go?
I care nothing about what you're saying. Right?
In any oil environment, this company makes money. It returns it to shareholders in the form of dividends and share buybacks. Once in a while, it makes a big purchase like it did a couple of years ago. The earnings continue to grow. The share count continues to shrink. This is a good company to own.
By the way, last week, the IEA said demand's going to be lower than previously expected, so they seem to have a sense of direction at least.
Get back to me next week when they change their view. Okay?
Oil actually rallied last week.
We got to move on. This time report, Bitcoin continues to move higher. Right now, trading just below 120,000, still up about 0.5%. Remember, Bitcoin trades right around the clock. Weiss, you recently bought more of the IBIT Bitcoin ETF.
Yes, I did. And as I mentioned, I think it was last week, was the final trade because now that the spending and tax bill are done, the focus is now going to turn to Bitcoin. Look, here's the simplest way to look at it. Trump has, depending upon who you listen to and what you read, because nobody knows for sure, between 60 and 80% of his net worth in Bitcoin. So which direction do you think it's going to go? Right?
So if that's your indicator, then I think that's the direction it's going to go is higher. I do want to talk to you about one thing. Last week, a lot of reporting that there was a short squeeze when it came to cryptocurrency. That was part of what was moving it higher. Are you concerned that short squeeze may be over and the catalyst for cryptocurrency and Bitcoin in particular may have run out?
It's like watching the 13F filings. So when I see that the fund I'm looking at, which is Trump Incorporated, starts to sell, which I don't think they will, then I'll start selling. But right now, it keeps going. Look, there's no supporting valuation for it here, like there was none at 10,000. So my analysis, fundamental analysis, is pretty pure. I just think it keeps going. You'll get it more regulated, and those bills are going through Congress now. The SEC is pushing some stuff. Right. So when that happens, then more and more brokers will be able to buy it for wealth managers. It'll be blessed. It's somewhat blessed now with the ETFs like I own. IBIT is where I'm doing it, not in Bitcoin directly. So I think it keeps going, and eventually they'll figure out a use case for it because there's not one right now.
Why is IBIT the better way to play?
Lowest cost.
Lowest cost. But why not just buy Bitcoin itself?
Because it's just easier for me to trade it by just trading IBIT instead of having traded through Robinhood charge. And here's some of the points that you're making. Some firms you go through, they could charge you 5% or 3%. Mm-hmm. You buy it through Robinhood if you have an account there, which I do, and I used to own Bitcoin directly through there. You don't pay a commission. So it's amazing how price insensitive people are or how unaware they are. Look at what you're paying for a transaction. So I buy IBIT. The cost to it, the fees are very, very low. As I said, just gives me great liquidity. Instead of having to go to Robinhood and sell it, I can just do it myself.
All right, there you go. And we are back on halftime with final trades. Jim's kicking it off with you.
Lockheed Martin, regardless of what happens in Ukraine, countries all over the world are rearming, and they're going to be buying Lockheed Martin airplanes and missiles.
Weiss.
We had a couple of analysts over the last couple of weeks come down, downgrade Netflix, calls Joe cared nothing about. I think that stocks pause now and continue going higher.
Shannon.
Jim stole a little bit of my thunder. Industrial sector, including defense and aerospace, but also an inflection higher in manufacturing production.
Joe T.
Cybersecurity, the big conversation today with CrowdStrike on Kramer. Checkpoint Software, one of the names that I like a lot. Never sell a quiet market, Frank.
Yeah, almost 1 year from that big IT outage, so it'll be kind of interesting to hear what George Kurtz has to say about that. That does it for half.
Hello and welcome to the after show, where we go over the stocks that they talked about on the halftime report. We're going to take a look at around 21 stocks, and ETFs are mixed in here in this list that I've created from the show. I've highlighted some of the strongest stocks and ETFs with the little blue flag that you see right there. And we'll also take a look at the indices today, the index ETFs like the SPY, the QQQ, Russell 2000. We'll take a look at some of the Mag 7 stocks, including Tesla. You know, Tesla is no longer part of the Mag 7. I'm sure you guys know about that. Broadcom is actually taking its place. And then what else? Let's see. You know what else we're going to do? We're going to take a look at the indices right now. Let's take a look at that and then the heat map as well. The heat map will show us how the individual stocks within the S&P 500 have done for the day. And we'll also take a look at the sectors very quickly as well. So let's do that. Let's start off with the Dow Jones. By the way, my name is George, and this is Blue Cloud Trading. The Dow Jones was up just 0.20%, not a whole lot. You can see that it was mostly going sideways all day, but it's slightly edged up towards the end of the day, and that's not a bad thing. NASDAQ was up 0.27%, very lackluster. S&P 500 up just 0.14%. And the Russell 2000 was up the most. It was up 0.67% today. Now let's look at the heat map. Whoops, wrong button. All right, here we go. Maps. Let's take a look at these. All right, so what you'll see here is, Palantir up 4.96% today. That's a big move, okay? But Apple down, Nvidia down a little bit, 0.52%. Tesla was up 1.08%. Google and Meta were both up. Walmart, Costco were up. The energy stocks did not do so well today, but the financials did. A lot of the financial stocks did really well. There was a mix here in the healthcare stocks, and energy was down a little bit today. Industrials up. All right, and so the other thing I like to look at is the groups within. So these are the individual sectors here. We'll take a look, and you'll notice that communication services was up the most, 0.85%, and energy and basic materials were down the most. Here's the 1 week performance with energy at the top, though. All right, up 2.1% for the week. Then industrials and consumer cyclical with consumer defensives in the bottom. All right, now let's get started with the indices, and then we'll get into those CNBC stocks that they talked about. So here's the S&P 500. And let's expand this a little bit, make this chart big. Okay. Well, S&P 500 still moseying on up, right? It broke through that 613 level right there. That goes back to these dates, back to February 19th, all right, of 2025, and it's broken that level. It's still moving up. Looks good on the daily chart. Here's the QQQ ETF, also still holding above the moving averages. What are these moving averages? There's the Tenkan-sen. The red line is the Kijun-sen. Okay, so the green line is the 9 period. There's the 26. Its price is above the Ichimoku cloud. We're using the Ichimoku indicator. It's going to help us identify the strength of the trend. When price is above these moving averages, the green line, the red line, and the cloud itself, very bullish. This dotted yellow line here is the 200-day moving average, okay? And so you can see that where it was stalling back here in May on the 200, it popped. Once it broke and closed above, not only did it close, it actually gapped up above that 200-day moving average. So giving it more of a lift to the upside, and you can see the expansion that took place since then. Since that break above the 200, it's already up 11%. So it's still moving. Dow Jones, it pulled back a little bit on Friday, got under the Tenkan temporarily, but now got right back above, but barely, just a little bit. The closing price was 444.58. The Tenkan or conversion line, as they call it, the green line, is at 444.43. So it did close above it. All right. And still looks good on the weekly chart. We're above the moving averages. The only problem with the Dow Jones is it's still stuck right under these levels, right? That double top that you see there. Okay. And so that it needs to break that 451.34 before we can continue to the upside. I think we'll have to wait a little bit. I would not be shocked to see just price sort of staying in a range until August 1st. Why August 1st? Well, as you know, that is the date, right? The August 1 deadline for the tariffs. That's when we'll have a better clue about what's going to happen there. So, all right, let's keep going. Russell 2000. Here it is in the weekly chart, still inside the Ichimoku cloud. One of the rules of this indicator, because it is a rules-based system, is that you don't want to add long positions or buy this stock, Russell 2000, this ETF, until price gets above the Ichimoku cloud. And if that's, of course, if you're using the weekly chart as your, entry time frame. I like to use both the weekly and daily. So I'm looking for the weekly to break above the cloud. And I want, of course, the daily has already made that break, as you'll see here. It's already been in an uptrend for a bit now. All right. You can certainly do that too if you want. You're just taking a higher risk. But it is above the 200-day moving average here on the daily chart. So that is positive. It's just still stuck, right? Still stuck. And you'll notice that for these last 3 weeks now, it's been kind of just hovering in that same exact spot. It has not really moved much above these levels right there. It's kind of building a little bit of almost like an ascending type triangle. Maybe we'll get a breakout above that, and then we'll see it pop on the weekly. Again, August 1st might be the time to wait. 2 more weeks. Here's the VIX. The VIX up 4.88%. Here it is in the daily. You can see the candle here popped above the Tenkan. Did it close above it? 1720, and it closed above the Tenkan or conversion line. Over here, you'll see this pop up, a little box. See, it says 1710 for conversion. The conversion is the Tenkan. The baseline is the Kijun, the red line. So the green line is the 9. I'm sorry, the green line is the 9 period. The red line is the 26 period. It still has resistance here at 200 moving average, just above 2. We want that VIX to stay in these levels. As long as it remains in these levels, market should continue to the upside. All right, this is conducive, again, to a more strong uptrend in the markets. Why? Because it represents volatility and fear, essentially. And as long as these levels are low, we're good. Back on April 2nd, what happened? That was when they announced the tariffs, right? Donald Trump came out on April 2nd. This was April 2nd, right there, that little candle. You can see that spiked, all right? It spiked about 140%. When the VIX moves up that much, here's what happens to the SPY. I'll just give you guys a little taste of what can happen. There's April 2nd. You can see that big drop that we had on April 2nd. And then, of course, we've recovered since. That's because he's kind of like, been postponing the tariff situation. But now August 1st is coming up. Could we get another surprise? It's either going to be a surprise to the upside or to the downside. And, of course, it's 100% dependent on his decision. All right? He's taking control here of the markets, unfortunately. It shouldn't be one individual, in my opinion, that has that much clout over the economy. But it is what it is. So we have to just observe the markets. We'll observe the charts. We'll see how the market reacts on August 1st and that specific week, and then we can respond to it in that scenario. So, all right, let's look at FEZ. What's that? It's the Eurostoxx 50 ETF. Eurostoxx were down 0.07, not much. It did actually recover. So it gapped down. You'll notice here, price gapped down in the early morning, and then the buyers stepped in. So tomorrow, I would not be shocked, folks, to see this break above the Tenkan. It's looking pretty bullish. I'll show you what it looks like on a 5-minute chart. All right, so there is the gap down that occurred from Friday all the way down to Monday here, and then just the buying just started happening immediately. Pushed the price up, went sideways a little bit, pushed up some more, and it's still held up above the Ichimoku cloud there. So we'll see what happens there, but it was down slightly, 0.07 from Friday's closing price, which is that dotted red line that you see right there. Okay, now let's get into the stocks they talked about on the show, and we'll start off with Oracle. And let's start off with a daily chart here. This was also Jason Snipes' final trade back on July 10th. As you can see, it has last week it pulled back. So there's Thursday, a negative candle, and it was Friday, and then it's kind of holding right above the 9 period. So that's bullish actually. Even though it was down 0.56%, I would not be shocked to see this pop up. It does still look good on the weekly chart. Okay, overall, I mean it's it's above the moving averages, but these are reversal candles, so it can go either way, honestly. We'll see tomorrow, right? If it gets under Tenkinson, I'd say this is time to exit the position probably, because there's a long way down to the Kijun-sen. It's about an 11.46% drop to the next level of support, that red line, and it could even come down to 198.31. That level is based on this prior high right here. So just be careful with if you're holding Oracle. But like this is a good sign. This particular candle is bullish. And if it can get above the high of that candle there, I think that we'll see it continue to move up. And maybe it was just a short-lived little pullback here, just like it was right here and here, okay? IYJ is the industrial sector index fund. This was Shannon's final trade today, but it was also her final trade back in March and May 27th. Still looks very strong on the daily chart and on the weekly chart. It has broken through that 144.20 level. Win Resorts. That is one of the stocks that Jim Lebenthal, Farmer Jim, I think he still has a position in this one. Here's the weekly chart, still doing well on the weekly. We've got a bullish future cloud here. It broke through this level here, and it broke through that high too. Now there's another high up here that it has not closed above. All right, so but it's doing pretty well. It's a little bit extended here. You can see that it's a little bit extended at this level, and it's starting to slow down since last week. You can see it's kind of going sideways now. So it's losing a little bit of the momentum. If we look at the ADX, we can kind of see that. So you can see the ascent of the moving of this ADX9. That's the setting that I have it at. See how it was moving like at that rate there. Then it slowed down a little bit, and now it's going kind of flat, right? So it's kind of like a rocket that took off. It's losing its power, right? It's running out of fuel, it looks like. But it could also just be building a little base here before it gets refueled or whatever and takes off again. So we'll see. IBIT. Let's look at IBIT. This is Bitcoin, the Bitcoin ETF that Steve Weiss likes, and I actually have a position in Bitcoin, but not in the IBIT ETF itself. I actually own Bitcoins in a digital wallet. Now, and I added some last week because of what I had seen here with the 6370 level breaking through, right? You see price broke through on the IBIT right there, and it's off to the races here for IBIT. If we look at Bitcoin, let's take a look at Bitcoin. All right, we can look at Bitcoin US dollar. And you can see it's at $120,000 for one Bitcoin now. Did you guys ever hear the story about the person that had bought Bitcoin in the beginning stages where it was like pennies for one Bitcoin, and he bought like a pizza with it, and it was like the most expensive pizza he ever paid for. It was like it cost him like over $100 million in today's value of Bitcoin, which is kind of crazy to think of that. But yeah, since it's a cent, I mean, it's done pretty well. Now, what's concerning here, this candle is in fact a red spinning top. I've talked about this before. This is kind of, it's a reversal candle is what it is. So there is a probability here that this price could come down a little bit. But Bitcoin is one of those assets that you basically buy and hold in your portfolio for, it's more of a strategy It's kind of, for me, the way I look at Bitcoin is it's more of an insurance policy, just in case. It's good to have a little bit of exposure in Bitcoin. And why do I say insurance? Well, you never know. I mean, the US dollar has not been doing well. You guys have seen the UUP ETF, right? Check this out. This is the UUP, the US dollar since these highs here. Let's look at the weekly chart of $30.78. It's down about 11.33% or so. And it's not looking good. It's been weakened. So, yeah. Anyway, got off to a thing there. Let's look at KRE next. So I like Bitcoin, but I would say be careful here because this daily chart is very bearish. This particular candle. Sometimes you'll get these, and then it will certainly continue to move to the upside, though, right? So watch tomorrow. If it gets above the high of that candle, then it's more likely to continue. If it gets below the low here, it's more likely to pull back some more. And then maybe we'll give you another opportunity if you're thinking about adding positions to Bitcoin. You add them when it's pulled back and showing a little bit more strength. Right now, there's no strength here, other than the fact that it gapped up, right? It gapped up and then started getting sold off. So again, all you need to do to understand the psychology of why this is a reversal candle, this daily reversal candle, is instead of looking at this as a daily candle, just switch it to a 5-minute and it will tell you the whole story of what happened today. So again, here we are on the 14th, right? July 14th. So here it gapped up, price over the weekend went to this level, moved up a little bit more, and then it just started, there was a little bit of profit taking that started taking place here and went sideways. But it didn't really break down to any crazy degree, okay? And you can see down below the directional movement index is kind of going to sideways right there, just like prices, back and forth. Okay, let's look at KRE, which is the regional bank ETF. This one looks pretty good on the daily and on the weekly. Now, the only thing with the weekly chart is the cloud itself is not that bullish quite yet. The Senko Span A is still under the Senko Span B. What is that? What are these lines, and why are they so far ahead of price? Well, basically, you take the moving averages, the Tenkan-sen, the Kijun-sen, the 9 and the 26, and you take the midpoint of that, those two moving averages. If you project it 26 periods into the future, that's where you will find the Senko Span A, the light-colored blue line. The purple line is essentially the midpoint of the last 52 periods, or 52 weeks in this case, right? And it's projected, instead of being projected under, like most moving averages, it's actually projected 26 periods into the future. Now, the idea here is if this Senko Span A is under Senko Span B, it's not as bullish as it would be if the Senko Span A was above. Okay? You can see back here in the past when the Senko Span A was under Senko Span B, how price was under the cloud. It was not really a good time to be adding positions here. If you waited a little bit, you would have been rewarded with a move up. Not always, right? Because you'll have breakouts, then you'll find another level of resistance, and then it might pull back. But the majority of the time, you'll have a higher probability trade if you buy when price is above the cloud. And that's what I recommend. That's what I talk about in the member-only videos. You might want to consider becoming a member. Real quick, let me show you guys how you can do it. You just come to my Blue Cloud trading page here. You subscribe for free, but then after you subscribe for free, you'll see this little plus sign, and you'll have the option of clicking on that once again, and this screen will pop up. You'll see membership, right? And you can either become a Blue Cloud supporter, where you support the channel per month, Blue Cloud trader, and this is where you get access to these exclusive member-only videos that I do each weekend, where I go over my entire portfolio. Blue Cloud Legend level member, you get those videos. You also get day trading videos that I've recorded. Plus, you'll have access to the daily trade updates that I post. It used to be the community tab. I can't, for whatever reason, I can't remove this, but it's called the membership tab now. Okay, so once you become a member, there'll be a new tab that pops up over here. It's going to look like this, right there, and you click on that, and that's where you'll find my posts. Okay. And there's Josh Brown holding Blue Cloud Trading in his hand. Okay? He's a big supporter. Maybe. Who knows? All right, let's get back. Let's get back, folks. Let's get back. KRE, Regional Banking ETF. So yeah, I like this one. KBE is the Spider S&P Bank ETF. That one looks good on the weekly chart. Here it is in the daily. This is what you want to find. This is what you're looking for. You're looking for a stock that obviously is above these moving averages, the cloud, above the 200. Chiku span, that's the closing price, projected 26 periods into the past. If that white line is above the candle 26 periods ago, that's also bullish. Another part of Ichimoku. It's a very unique indicator with multiple indicators on there, right? Multiple indicators, but that helps us to get a better picture at a glance, which is what Ichimoku stands for. At a glance, we can see it's a strong trend. So I like KBE on the daily, and I like it on the weekly. All right, even though the cloud is just about to become bullish here with the Senko Span A crossing above Senko Span B soon. HBAN is Huntington Bankshares, financial services sector, and it's the regional banks there. Let's take a look. So here it is on the weekly chart above the moving averages. Looks good. On the daily time frame, also good, but it has pulled back. Today was down 1.84%. It might be just a short-lived little drop here. One thing I am concerned about a little bit is the fact that the directional movement has turned a little negative here. See that positive DI, the green line, has crossed above the negative DI 9 right there. And on high volume, okay, so that you got to pay attention to that. However, this is bullish. A spinning top after a pullback is actually quite bullish. The fact that it's moving it's more likely to pop again. So we'll see what happens there. JP Morgan looks pretty good still right now. I had a trade in this one. I added this one back on May 13th, closed it on June 30th, had an 11.3% profit, moved up a little bit, dropped. Now it's looking like it's going to probably give us another buy signal here. It's looking pretty good. You can see the ADX is still going down, but the positive DI is above the negative DI, and it's starting to move back up again. I think if it breaks through this little consolidation area here, it's going to make sense. Morgan Stanley, on the other hand, has already done that, right? It was up 1.19%. It looks pretty good still. It's above the 141.99. It's all-time highs here almost, right? The all-time highs are around that level of 145, and it's just under it by a few dollars. XLK looks good, still holding up above the moving averages. I like technology ETF. MTUM, Momentum Factor ETF is also gave us a nice little buy signal right there, up 1.25% today on the daily. On the weekly, still very bullish. What about Citigroup? Citigroup here looks pretty good too. Let's look at that's the weekly chart. Let's look at the daily chart. I did add this one back on June 24th, closed on July 7th for a 10.2% profit on that trade. Pulled back a little. It's starting to show some more strength again. So this is not a bad one. I like that one. Checkpoint Software Technologies. Just because it's bullish, it doesn't mean I'm going to add position every single time I'm going to add the position. I did add some new positions today and shared that with members. So I'm always looking for new trades, and I also share when I close out of positions with legend level members. Checkpoint Software Technologies is inside the cloud. So nothing to do here. This was Joe Terranova's final trade today, July 14th. I'm concerned about this one. Why? Because you can see that it hit that level of 234.35 back here in March, came right back to that level in June, pulled back, came close to that level, but was unsuccessful in even coming to that same level. It actually was lower, right? So it created a lower high. You can see that right there. See that diagonal trend line? So it created a lower high here. And the other problem is it also broke through. It got under the lows of right there. So that created a lower low. It's inside the cloud. I just wouldn't be adding a position here. It just doesn't make any sense. Tenkinson, the faster moving average, is still under the slower one. Chiku span is underpriced. All right, it looks like the cloud is gonna converge here and maybe go negative. Notice how the Senko Span A is moving downwards. The single span B is moving upwards, and it's looking like it's about to cross. It's a negative cross. It's not a bullish cross. So I would hold off on checkpoint. If we switch this to a weekly chart, what does it look like? It's still under the Tenkan-sen still. All right. BAC on the daily chart is looking pretty good. I mean, it's pulled back a little bit, got under the Tenkan-sen, found some support at the 26 period, but it's bouncing off of it, so that's good. It might give us a new buy signal soon. XLF, financials, same situation. Okay. Netflix. This one actually closed under for a few days, under the Kijun-sen. Right now it's retesting the Kijun-sen, but it's stuck under it still. IAK is the Dow Jones Insurance Index Fund. Now closed under for 1 day, under the cloud. You can see that right there. And then it developed a very bullish double candle pattern called the bullish engulfing. It's a red candle followed by a much larger green candle that engulfs it. Okay. And so it looks like, where is it? Right here, bullish engulfing. Let's zoom in on that one, right there. And that's a bullish double candle pattern. You can find this candle pattern reference sheet on my Twitter page. Look for the links on my page. Okay, KKR has pulled back a little bit, down 1.15%. Still above the moving averages. This was Brin's final trade back in June. CHD, Church and Dwight, is inside the cloud. No on that one. Now, let me go back to KKR for a moment. It looks good in the daily. Why does it not have a blue flag here? If we look at the weekly, it's inside the cloud. I forgot to mention that. Okay, that's why I didn't give it a flag. Okay, CHD is also under the cloud on the weekly. XOM is inside the cloud on the weekly, so I would hold off on that one. LMT, Farmer Jim's final trade, on July 11th. This was Lockheed Martin. Was it July 11th, or did I get the date wrong? Maybe, I don't know. Anyway, I think he brought it up today too. He did bring it up today. It was I typed this incorrectly. Yes, I created that on July 14th. So now it does look good in the daily. Okay, I will say that because it just broke through the Ichimoku cloud. However, it doesn't look that great. Why? Because again, Chica span is underpriced. The cloud is still relatively bearish. We do have a higher high here a higher low here from that low. But it's something I would not be touching quite yet because the weekly chart is very bearish on LMT still. All right, let's go to these Mag 7 stocks. Google on the weekly chart. It crossed above the 181.23 level, which is based on this candle right here. I should circle that. Actually, it's a daily level. Hold on. Yeah, it's that level right there. So this is this light red candle. This light red horizontal line that you see right here is based on the high of this little candle. You can see it was it found resistance there, and it did create a spinning top, which is a reversal candle. So I would not be adding a position here yet. This is not a conclusive breakout. When I see a reversal candle, I'm a little bit more skeptical. It did not happen on high volume. If you look at the volume down here, it was about the same as on Friday. The ADX is moving up, so that's good. And on the weekly chart, what do we have here? We are above the cloud, but the Tenkan-sen is still under Kijun-sen, and it looks like the same span A is about to cross. So we're getting closer and closer to Google being a nice buy point. And so I've been watching it. It's really a stock I want to own, but I'm waiting for the rules to give me the okay, basically. Okay, so let's take a look at Tesla next. Here it is in the weekly chart. Still under the moving averages. It's inside the cloud right now on the weekly, and on the daily chart, it's inside the cloud. No on this one, folks. No on this one. Apple is under the Tenkan-sen, holding up above that 208.42. It closed at 208.62, so it's 20 cents above that support level. And nothing really to do here. with Apple because even though on the daily it's been showing a little bit of strength recently, if you look at the weekly chart, it's still under the cloud. So I haven't been interested in owning Apple. It's going to be really impacted quite a bit by the tariffs if they remain in effect, and if they're big tariffs, if they're like more than 10%, it's going to be a big problem for Apple. Some companies are going to be impacted a lot more. Microsoft is out of the Mag 7, Microsoft is probably the least likely to, and Google are the two stocks I think that are least likely to get impacted the most by tariffs. They will be impacted, but not as much as Apple, Nvidia, okay, Meta. All right, so just keep that in mind. All right, how do I know that? Well, I did a little research. Okay, so let's see. That's it, folks. I'm not going to cover any more. Thanks for watching. Thanks for supporting this channel. Again, if you haven't hit the like button by now, you should hit that like button, subscribe, maybe share this video with someone. And remember, if you want to access the member-only videos, you can become a member. And you can do that by hitting that subscribe plus button there or here. Or if you click on one of these videos here, that will also bring you in automatically. The last video was 1 hour and 16 minutes. Okay, that was over the weekend, just a day ago, for the week ending July 11th. And I shared an additional 20 new stock ideas for this week specifically. All right, guys, have a great rest of the night. I will catch you all in the next video.